Cathie Wood has been loading up on this Zoom stock right here. If you look at the buying history, December 20th, he bought 133,000 shares, and then December 19th, and then June 21st, she haven't really sold any Zoom stock at all. And that kind of got me interested. Why is he buying so much Zoom stock? Even look at their the overall company performance, right? Overall, Zoom is at 5th place in her stock portfolio, and this is pretty big amount. She's invested about $625 million into Zoom stock. So today, I kind of want to do a deep dive into Zoom. Gonna first talk about the valuation. Its current valuation at around $72 a fair value, overvalued or undervalued. Next, I'm gonna talk about the financial health of the company. How much debt it have, how much money, and is the company profitable? Third, I'm gonna talk about ownership. Is the company selling shares? The owner, CEO, CFOs, are they selling shares? Are they buying shares? These are like really important questions you wanna kind of wanna answer. And then last, I'm gonna go into like a year in review from January to December. What happened to Zoom? What are some of the events that caused Zoom stock to continue to fall down? And then last, I'm gonna go into competition. What is the main competitor that kind of eating Zoom for lunch? And what I think overall the reasoning behind Cathie Wood of buying Zoom. So hopefully you don't want to miss out on any of the part of the video. Gonna get into a really nice kind of detailed analysis of Zoom stock, right? And hopefully you can get this video early thumbs up. Greatly appreciate it. And let's go in with the first topic, which is Zoom valuation. Currently, the price is around $71, right? And it is undervalued compared to analyst and price target, which is $117, right? So this is about 39% or 38.8% undervalued, right? So if the Zoom current price is above like maybe 140 or 150, that is overvalued, right? But right now it's undervalued by 40% based on analyst price targets for Zoom. And the market is just doesn't love Zoom because people think that Zoom is just a one-time thing or a pandemic thing. People don't really use Zoom anymore since the pandemic is over. Is this true? We'll continue to look at it. If people really stop using Zoom since pandemic is all over. So let's look a little bit deeper into the kind of the price to sell. So right now the price to sell, they have a price to sell ratio of 4.9. This is considered average. I would believe average since looking at their revenue projection. So 4.9 price to sell is average, but the PE ratio is at 93. Let's compare this 93 PE ratio compared to the broader market, right? So Zoom is sitting at right here. Peer average is at 85 and Zoom is at 93. So if you think about it, 85, 93, so the market is giving it a fair valuation, right? But the analyst doesn't think that is valued at $73. It should be $117, right? So compare Zoom to Bentley Systems, PTC, and NSYS, it is a pretty good value as currently, right? So, and then we continue to look down. You can dig a little bit deeper, like compare like a one-to-one software company, right? So Zoom right now is projecting estimate growth about 17%, which is pretty aggressive in my opinion, right? Currently they're growing about 4 to 5%, and they are reaching estimated growth of 17.2% and price to earning of 93 times. Comparing it to ServiceNow, which is negative 2.6%, and they have a price to earning of 90. These numbers just don't make sense. And the Bentley system is also 93, and they have Bentley system have about 20% estimate growth, right? And then Here is something like even crazier. Like you thought Zoom was like pretty fair value or expensive, but look at Palo network is growing at 22%, right? And then price to earning of 153 price to earning, right? And then look at Palantir stock, right? Technology. They are like a consulting firm kind of technology that help government enterprise build their software using AI, and they are growing faster, right, at 34%, and they are price to earning at about 260 price to earning. Is way crazier. So if you ask yourself, Palantir is getting 259 price to earning, and then Zoom is only getting 93, but at the same time, their estimate growth is 17%, right? And then Palantir 34%, right, and almost double the Zoom's enterprise. And then Workday is growing at 44% and price to earning of 1,074 price to earning times price earning. That's crazy, right? Comparing like all the software from one to one. Yeah, Workday seems like the most overvalued right now, but it can back it up with estimated growth, right, at 44% and a current market cap of $71 billion. And Zoom have current market cap of $21 billion. Next, I like to break it down the revenue kind of by segment. So America is getting the majority of the revenue at 71%. Europe and Middle East is 16% of the revenue, and the Asia Pacific is make up about 18%, 12.8% of the revenue, which is $575 million at 2023. So where do they spend majority of this revenue? Of course, sales and marketing. They spend half of the revenue on sales and marketing. If you go to LinkedIn, if you go to if you see, I sometimes hear Zoom communication on my radio, sometimes I see it on TV. They are trying to target these enterprise business people to use Zoom. Consumers like you and me, we probably don't need the enterprise account, right? Where you just send a link and you don't typically run over, I think 50 minutes. If you run over maybe 30 to 40 minutes, I don't know what's the number, but there's a certain limit, right? If you go to enterprise, there's unlimited meetings, right? But if you don't have the enterprise, maybe like 40 minutes, they'll ask you to stop the recording and then you gotta start a new one, right? So so they are doing a lot of sales and marketing to get enterprise people to join the Zoom ecosystem, right? They currently introduced the Zoom bundle, Zoom One, which include the Zoom phone, Zoom contact center, Zoom chat, right? Everything together for communication, and Zoom Room, right? So all my company is currently using Zoom, and the product is pretty good. How did they find out about it? Not really sure. Maybe from sales and marketing, maybe from word of mouth. But one thing is for sure, Zoom spent a lot of money to get words out there, right? And I am fine with it. You know why? Because they are currently profitable. Later on, I'm gonna go into the financial health. Let's keep going with the kind of. Let's look at 2020. That's when the pandemic happened. How much money is exactly are they spending, right? So when the pandemic happened, their revenue is still at 71% for America, right? And then Europe is at 17%. The sales and marketing, they spend about 60% of the revenue on sales and marketing. So when the pandemic happened, they doubled down even more. They didn't cut back on expenses and sell advertisement. They increased it, right? And look at that. That is pretty good amount. So if you earn $10, you're spending about $6 in sales and marketing. Maybe let's go with 2017 when there's no pandemic, when Zoom was just a baby, right? And right now they only made about $50 million. So in 3 years, they made about it went to $1.9 billion in 3 years. And that crazy amount of growth. 2017 they made 50 million in America, and then 2020 they made $1.39 billion. Yeah, Eric Young definitely capitalized the market, right? So 2017, they spent about 50%, same thing, 50% average on sales and advertisement. I guess like maybe 2021, yes. So 2020, when the pandemic happened, they would spend the most money, and now they kind of cut back on advertisement because they want to stay profitable. So one of the great things about Zoom is it does not have any debt currently at its balance sheet. So there is zero debt and a fortress balance sheet of $7.41 billion. So there is zero risk of Zoom going bankrupt, right? There's like you when you invest in a company, you gotta look at their balance sheet and make sure they don't go bankrupt. You know, my brother, he invests in some companies, man, going bankrupt, lost all the money. So be careful. Make sure to look at Zoom, look at the balance sheet, make sure it don't go bankrupt. All right, last thing we're gonna look at is leadership. Are they buying shares or are they selling shares? So of course, right now, Eric Young is the pronunciation is Young. Okay, Eric Young. He's from China, right? And every time I listen to his earning calls, he have like a little bit of Chinese accent, a little bit hard for me to understand. But I also Chinese, I don't know why I should be able to understand it. But anyways, he been the CEO for 12.5 years. And one thing I love about Eric is he owns 9% of the company, which is worth $2 billion. This is what I call skin in the game. You know what? Why is this so great? If the company is doing really, really bad, his net worth is going down with the company. Like if you invest $10, right? You want the founder to also invest the same amount. If the company is doing bad, he is staying up at night, not going to sleep, and you're not going to sleep. You don't want like you just invest $10 and your whole money is like you're losing a lot of money. Maybe you invest like let's say $100,000, right? And the founder does not invest any money, doesn't own any shares, and when the stock drops, he's still going to sleep really fine, but you're not going to sleep. So you want a CEO that owns maybe 10%. At average, 10% is great, right? Not all CEOs will own that much, but if you find a CEO that owns 10%, it's a really good sign because Eric Young is here for the long-term vision, right? He's not here for like the quarterly results. He is here for the long-term vision that he want to build for Zoom. If he does not have any vision, he will not like put $2 billion on $2 billion stock and he will sell everything, right? And recently they did hire a chief technology officer, Su Donghuang. He's probably pretty good. I guess that's why he hired the chief technology officer. And then a chief finance officer, Kelly. I see he's been here for 6 years. So basically since the beginning. And then interim chief legal officer, Aparna, all right? So they are really experienced, except for a couple of these new hires, chief technology officer and then chief sales and growth officer. So I guess this position is a bit more stressful, you know, because you're spending 60% on sales, and is it effective or is it not effective? So they have different channels, right, from radio to Google ads to billboard signs. So you gotta make sure it's effective, have a good return on sales. So if it's not effective, they just gonna replace you. That's why like they might go through a pretty good amount of chief sales officer, right? Because is responsible for maybe for 50%, as you can see in the previous slide, 50% of the revenue. And then let's look at the sell and buy. So currently nobody have bought, but one person have sold, which is Aparna. She or he, I'm sorry, I don't know what's the gender, but that's called Day. Day is the chief legal officer, and they sold about $440,000 March 2023. So at the price of $72, which is kind of at the current pricing right now. All right, so I don't know, it's good. I think this is a really good sign. Why is it a good sign? Because if Young is not selling, I don't see him selling. He still owns about 9.2% 39%, $2 billion, right? So this is a good sign. If you see him show about maybe like $500 million, oh man, trouble. But he's not selling. And then right now, looking at ownership breakdown, right? So it's 57% are institution, and the general public like us, we own about 23%. So in order for the stock to go to the moon, we need institution investors to jump in, maybe increase that to 60 to 70%. Man, the stock will skyrocket to maybe like $300 again. And then top shareholder, look at this beautiful chart. Eric Young is the #1 shareholder at $2 billion, and then Vanguard is at 1.6. And then of course you saw ARK, bought heavy, never saw anything, maybe decreased by 2% because the increase in stock price, but she still owns $711 million in Zoom. And now I kind of like to look, later on I will kind of get into like why she bought that much and owns that many Zoom stocks. There's a reason behind it. Like, let me give you some hints. AI. Yeah, Zoom is a couple AI products. I'm gonna go into detail about AI products that Zoom is using, that I am also using at work. And then ownership, right? So yeah, let's look at the employees. So at the beginning in 2019, 1,700 employees, and currently at 8,500 employees. So many employees across the room working on Zoom Phone, Zoom Contact Center, Zoom Room. So you need a lot of employees for research and development. And now I gotta look at kind of the history of Zoom, right? Let's look at it for 1 year. What exactly happened, right? So at the peak price for 2023 is at $84, right? So there's 5 major events happened in 2023 for Zoom, and the stock price, it didn't really move that much, right? It just increased by 10%. So right, so first event right here at February, Zoom CEO take a pay cut. So I remember beginning of the year, everybody, all the enterprise was kind of laying off people, right? Zoom, they laid off, take a pay cut after laying off 1,300 employees, and since stock price soaring, earning him more money. Zoom, the online platform that rose to prominence during the pandemic, is experiencing a slowdown from the previous glory days. Zoom announced on Tuesday that it will downsize 1,300 employees, about 15%. And one good thing about the CEO is he also took a pay cut, right? It's not like he let go 1,500 and still makes same amount of money. You know, I think the CEO makes about, let's see, I think it says in here somewhere, make about $75 million, I believe. So CEO makes about $76 million per year. Is this expensive, or is this a little bit average CEO price, right? So total compensation is 76 compared to other companies is above average. So the current CEO of that size of a company is about $12 million. But if you compare the Eric Young's CEO money, about 76, to Lucid, the CEO Lucid made about $356 million in 1 year. Yeah, so you never know what is the good, like the fair value compensation for a CEO, but he did took a pay cut. I don't know how much though. So he was previously making 76 million, but I don't know how much after the pay cut. But yeah, on that day, I believe the stock sort of popped, because usually they have a laid off, the stock will kind of jump, but it didn't jump. It kind of fell off. I guess it's because when they announced it, it popped to $80. I remember it popped to $80, but after like in the afternoon, I remember like the market came out with some news about rate hike or something, so it dropped 6%. So the 6% drop was like broader market drop. So around February, Zoom video started rally as earning top estimate. So they had a pretty decent earning on the Q1, I believe. Yeah, Q1. Maybe that. Let's see. Let me read it. were gaining ground after the company posted better than expected financial result for fiscal fourth quarter ending January 31st. Okay, Q4. All right, Q4 they when they posted result, yeah, pop like 1%, decent, not like stellar, but decent. And then here, May 2023, Cathie Wood already buys dip on Zoom, scooping out 17.5 million in the stock. What happened that day? It dropped 7% on that day. So, can read out. Okay, let me see if I can read it. Okay, right here. So the stock market sold off 8%, just water sell off, and then Cathie Wood bought 230,000 shares. So she have a lot of confidence. And then let's look at Zoom bomb forced cancellation of 2 public meetings. All right, so this is kind of like a Zoom prank. So some people were having like an important meeting, and they were just kind of went in there and did some not appropriate stuff, because this is kind of like this right here incident hurted the Zoom reputation on security, right? People, just random people just that is joining the meeting, which is not good. Like if you're holding like an important meeting with like a business person and you're about to sign a deal, and you don't want to see some random person just come on to your Zoom meeting and say some crazy stuff. And the last thing is Zoom sales slide after offer tidbit Q4 sale guidance. So for the Q4 guidance, which is still going on right now, Zoom investor front forecast, even though it posted better than expected third quarter results, right? So if you look at the results, all right, so this is kind of like the timeline what had happened. One event they kind of forgot to mention is the Zoom security. There was a whole fiasco about Zoom stealing customers' information, right? And Eric Young had to publicly say, we're not stealing your information is kept at a really secure place, so don't worry about us using your information, right? But let's look at their like revenue, right? So for revenue for the for third quarter, 3% growth, 1.14, and second quarter, 3%, and then this is also 3%. So averaging out 3 to 4% growth at $1.12 billion, right? And this is the only quarter that they lost money. So that was a pretty scary moment. Like, why did they lose money? Did they spend too much money? January 2023, they lost 104 and net income. And then after the quarter after that, they continued to make money. It recovered at 15 million. And then July, 180 million, and then 141 million dollars. Most recent quarter. Like look at annually, growth is. If you look at 2020, that's when the pandemic kind of at its full swing, right? And they made 622 million. Right? If compared to 2019, they only made 300 million, and they doubled it to 600. And then 2021, doubled it, triple. Oh my goodness! So 2020 to 2021, they quadrupled 4 times. So 600 million. To $202.6 billion. So that is quadruple the money at 300% growth. So that's at 2021, I think the stock price was at its peak. 2020. Okay, it's 2020. At the end of 2020, the stock price was at its peak. It did jump up again because the revenue is still growing really, really well. And then around 2022, it's still growing at 50%, but not crazy though. At 2022 at 4 billion. So they almost doubled the revenue, almost, not quite. And then 2023 it slowed down to 7%. What we are hoping to see, if we can get back on track to the 50% growth, which is literally impossible, right? If you look at the analysts, right? They're projecting at around 17% growth. If they continue to grow at 17%, that's good enough for the analysts, and the stock price will continue to grow. But right now, they're experiencing 3% growth. How? So here is the question, right? How is Cathie Wood what is he thinking on Zoom that gonna give her confidence to buy the stock that this revenue number will increase to maybe 10% growth to 14% or 17% growth? If they can continue to grow the revenue, I mean, if you look at their net income is fine, right? And then their cash, the balance sheet, beautiful, $6.49 billion currently at this balance sheet and $0 in debt. And they just want the main main topic or main kind of ingredient that is holding the stock back is this 3% growth. We need this to be 10%, 17%, right? And if you look at, I can answer a couple questions on how they can increase this right here. So if you look at their most recent quarter earnings, let's see if I can pull this up. Where is it? Right here. Oh, right here. Okay, Zoom Communication quarter earnings, right? If you look at, okay, they have like a Zoomtopia where they talk about their innovations, right? And then customers that signed, okay? And here is kind of the important meat of the video, right? They did reach 0 million customers in Zoom phone. So that they use like a phone to call people, right? You don't want your personal cell phone to call like customers, right? They use the phone to call business, right? They have 7 million customers, and they reach 700 contact centers. 700 contact center customers, right? So these two will continue to grow nicely. And then the Zoom One customers. Zoom One is the one with the Zoom phone, Zoom contact center, Zoom Zoom Room is like a bundle. Zoom One grow about 330%. So that is telling me that enterprise customers, they continue to add more services, right? So if they had a Zoom video, which is their flagship product, later on they add Zoom phone, Zoom chat, and that's how like they are growing that quick. Continue to monetize the customers, right? And so total revenue, right? We saw that already. And so the Cathie Wood's thesis is this enterprise customers, right? Right now, currently, most recent quarter, enterprise, the customer grew about 5% and retention rate is about 105%, right? So the enterprise revenue is about 58% of the total revenue, up from 56% last year. So enterprise customers continue to grow and is making out about 6 to 4 and 60, almost 60% of their total kind of revenue, right? And you definitely want this to continue growing. But there's one enterprise that is holding them back from continue to grow. Anyone want to guess who is holding them back? Right here, Microsoft Teams. If you look at the App Store rankings, Microsoft Teams is currently ranked number 1 in the App Store. Microsoft Teams sells exactly what Zoom sells. Like Microsoft Teams can set up meetings. I don't know if they have a Zoom phone or Zoom contact center, but their core business, which is video chat meetings and video chat and team chat, is already competing with Zoom. Right now they're at 3rd place. So this is like the final boss that Zoom have to beat in order for Zoom to continue to grow 10%, 15%, but they're innovating, right? They introduced the Zoom AI technologies. That core AI piece gonna be Cathie Wood's main thesis, right? They have Zoom AI. The most recent Zoom feature for AI is Zoom AI Companion, which about 220,000 accounts already signed up for it. So Zoom AI Companion generated about 2.8 million summaries so far. So if you're in a meeting, you get finished meeting, you can ask the AI to generate the summary for you. and it's doing pretty great. So hopefully it can continue to grow on that forefront. So yeah, that is basically about the end of the video and my research on Zoom. Why buy Zoom stocks right now? Honest answer, not right now. I'm not gonna buy it right now. Even that the price to sell is pretty decent. They have fortress of money, $6.4 billion. I do own Zoom stock right now, but I don't want to sell it because it's down. And Zoom have zero chance of going bankruptcy. And people continue to use Zoom because it's ranked number 3 in the App Store. What would make me buy more Zoom product? If the AI capabilities continue to improve, right? The AI, like the AI summary, continue to improve, or AI kind of more different features that they can come up with that can help me do my job better, and they can continue to increase these AI features. And you know, when you increase AI features, people find that AI features really way better than Microsoft Teams. People are signing up for Zoom more than Microsoft Teams. That means revenue start to increase. If I see the revenue go from 3% to maybe 7% next quarter, or to maybe 8%, that's when I see that, okay, Zoom is doing the right thing. I will continue to add dollar cost average. Right now, they are, if you can see at their revenue, right, staying flat 3%, quarter after quarter after quarter. So, truthfully, I'm not gonna buy anything right now, just being honest. But it's a really good stock. I will just keep an eye on it because Cathie Wood is kind of betting like her farm on this Zoom stock. And from the financial standpoint, it's doing really, really well. CEO is in the game, owns $2 billion. So yeah, definitely keep an eye on it. If you found this video useful, be sure to give a big thumbs up. And my name is Calvin, and I'll see you guys next one.